The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Welcome to Squawk Box Europe. I'm Ian King with Ben Boulos. Here are your headlines. The SpaceX show goes on the road as bankers tout the company's astronomical valuation ahead of its IPO next week, with Goldman reportedly eyeing a 100-fold revenue increase by the end of the decade, while S&P Dow Jones Indices breaks with the Nasdaq and says it will not alter its listing rules for the company.
The AI rally is put on pause, the Nasdaq lining up a second day of losses, while South Korea's KOSPI plunges. Head of OpenAI For Countries and former UK Chancellor of the Exchequer George Osborne is bullish on the sector.
What I can see from inside OpenAI is the future demand for compute is going up exponentially. From where I see, there's a big increasing demand for compute.
Hezbollah rejects the ceasefire agreement between Israel and Lebanon, complicating peace talks between the US and Iran, though President Trump floats the possibility of a meeting with Iran's supreme leader.
I don't want to meet, but if I did meet, I'd be honored to meet him. I'd like to see if we make a deal. But if we make a deal, it's possible that I would meet him. I'd be okay with it.
Would that happen here in the U.S., White House?
Oh, I don't know, Peter. I haven't really heard too much about it. I didn't suggest it, but some people have suggested it. If it happened, it would happen. I'd be respectful.
SpaceX's IPO roadshow has officially kicked off ahead of its blockbuster debut, with JP Morgan chair Jamie Dimon hosting Elon Musk for a virtual fireside chat with potential investors. Dimon described Musk as the Edison of our time as he introduced the SpaceX CEO. When asked why he had chosen to list now, Musk said the company is embarking on a significant growth phase and estimated that it would end up putting more than 100,000 satellites into orbit. The Financial Times, meanwhile, is reporting that Goldman Sachs is expecting revenues at SpaceX's AI unit to increase by around 100-fold by 2030, with this growth level underpinning the valuation of $1.78 trillion. Leslie Picker has more on the mammoth IPO.
SpaceX kicking off its IPO roadshow on Thursday with plans to market its record-breaking IPO at a $1.8 trillion valuation. That implies a multiple of 95 times last year's revenue, which would be lofty for a high-growth, profitable and low-debt company. And SpaceX is really none of those things. So if it's not for those historical financials, then what will bring in enough demand to cover a record-breaking $75 billion book? Well, the bulls would say this is a bet that Starlink's cash flows can fund the construction of orbital AI infrastructure at scale, especially if its next-generation launch vehicle, Starship, succeeds. The bears would say the company is spending aggressively and burning tons of cash ahead of demand for products that don't even exist yet. But there are also structural aspects of this IPO that have never been tested before. For one, this deal has an incredibly small float, just 4% of shares outstanding. That's less than half what's typical for big, buzzy IPOs. Fewer shares available to trade can lead to less selling pressure, although the absolute float size of $75 billion is 3 times bigger than any other U.S.-listed IPO. The company is also aiming for 30% of its allocation to go to retail, I'm told, which is much larger than usual. Additionally, the new rules for SpaceX fast-track index inclusion means forced buyers shortly after the debut, but looser lockup restrictions mean there are also likely to be some sellers shortly thereafter. For CBC Business News, I'm Leslie Picker.
Well, S&P Global has ruled out adjusting its rules to allow a swift entry into its indices for SpaceX, saying that exceptions to its requirements should not be granted solely based on market capitalization. The Nasdaq has already tweaked its rules to allow newly listed mega caps to join its flagship index. S&P's requirements for admittance into its main indices include ongoing profitability, as well as a requirement for a public float of at least 50%, neither of which SpaceX meets. Talking about the markets and the indices, let's have a look at how they are doing. And this was the picture at the close on Wall Street. A bit of a mixed picture it was the Dow that was the strongest performer, in fact, posting a fresh intraday and a record closing high. In fact, the Dow posting its best day since the 17th of April there, helped by the fact that we saw a fall in the oil price, Brent and US light crude both down around about 3%, and that clearly helped some of the energy-intensive industrial stocks listed on the Dow. The Nasdaq closed below the flat line, reflecting that rotation away from the AI trade, and it was Broadcom that precipitated that. It adjusted its guidance for revenues for the full year up to October. It gave a signal that they'll be lower than analyst consensus estimates, and we saw its stock plunge, weighing on the Nasdaq there, enough to bring it below the flat line. So that's the US markets, and some of that concern around the AI trade very much filtering through to the Asian markets currently in session, and the biggest falls there on South Korea's KOSPI, some big chip maker names, SK Hynix and Samsung suffering losses as well. Again, that sentiment around the AI trade very much in evidence there. It's just the Shanghai Composite of those four benchmarks we've got on the screen posting gains in the current session. Let's have a look at what's being anticipated when the European Friday trading session gets underway. And a bit of a mixed picture there. FTSE futures, the only one of those three looking to open into positive territory. As ever, we will bring you the European market open as and when that happens in about 54 minutes from now. So that's European futures, and then US futures. It is worth mentioning some key data out today. We get the US non-farm payrolls that give us a further indication about the state of the US labour market, and the consensus, the estimates are that we'll see growth of around 80,000 jobs. That's lower than we've had in the past month, but if that is proved to be accurate, it will mean that we continue to see an average of at least 76,000 jobs a month being created each month this year so far, significantly more than the 10,000 we saw on average each month last year. Ian.
Thanks, Ben. Well, with us now is Luca Penarola. He's senior economist at BNP Paribas Markets 360. Luca, very good morning to you. Obviously, the big event here in Europe next week is the ECB decision. We obviously got a firmer print for Eurozone inflation this week. Market seems to think a rate hike is nailed on.
Yeah, we're expecting a rate hike as well. If you look at the April report of the council meeting that was back then, there was sort of an agreement that some action would be required at some point, but they decided to hold off, waiting for more information. That information, I think, has gone in the direction of needing some action. Listen, I don't think we're talking about the start of a hiking cycle comparable to the one of 2022, where the ECB raised rates from negative territory to 4%. We're thinking the ECB is going to recalibrate monetary policy. We have two hikes penciled in, one next week and one in September.
What sort of impact do you think the higher oil prices are having on consumer demand here in Europe? I mean, is this leading to demand destruction?
We are seeing a softening in some indicators. For example, the PMIs and other survey indicators. I would wait for some hard data before drawing strong conclusions. And here again, let me draw a parallel to 2022. In 2022, we saw some survey indicators plummeting. For example, IFO expectations in Germany, when the economy actually didn't do that bad. So I would say, yes, we see some evidence of weakening demand, but I would wait for more data before I draw strong conclusions.
I mean, I think your base case for Eurozone GDP is 1% growth this year. I presume you regard the risks to that forecast being to the downside rather than the upside?
Yes, definitely, because the conflict could have a duration that is longer than we expect. We are expecting at some point flows to the Strait of Hormuz to reopen to an extent. But if that doesn't happen, of course, there's a risk. And there's another risk because I think policymakers, forecasters as well, are facing two types of uncertainty. Uncertainty over the geopolitical outlook, so what is going to happen, and uncertainty over whatever happens, how that translates into economic data. So we're dealing with these two types of uncertainty, and on balance, I would say risks are to the downside, yes.
And there are European leaders meeting today in Montenegro and looking at potential new additions to the bloc, as this slogan of Montenegro aiming to be number 28 by 2028. How much do you think European economic growth is now reliant on the bloc expanding?
Yes, so I would say that these allows me to talk about two different things. So the cyclical aspects that we're facing and the structural ones. What you pointed at to is more the structural aspects of EU policy, enlarging the union and at the same time making the union more efficient, more resilient to shocks. And this is an effort that has been ongoing for a while. We think the European Union can make progress to become more, let's say, structurally resilient to shocks. But this is not going to solve the problems that we have in the short run. Because, of course, adding more members to the union or investing more in clean energy technology, that is going to help, but it's not going to help now. And at the moment, the focus is, of course, on what the ECB is going to do, because although they agree that reacting to a supply shock is never easy for a monetary policy institution, but this is what they have to do. This is the data that they have at hand. So I would say, yes, it's good that we see progress on the structural side, but the cyclical side, I don't think it's going to be fundamentally affected by that.
And then some of the biggest news this week for Europe has been that huge investment by SoftBank in France to build out AI data centers. And I suppose the impacts of that can go one of two ways. You could have that inward investment which helps boost growth in the Eurozone, but conversely, you can have a situation where that potentially fuels further inflation, no?
Yes, I agree in the sense that when you look at the history of productivity shocks, we tend to think that productivity lowers inflation and everything is going to be fine. Which is not the entire story, because as you say, sometimes technologies do require a lot of investment, whether this is for data centers, whether this was to build the electrical grid at the beginning of the 20th century. So yes, when you do deploy a technology that is good for growth. However, the impact on inflation may actually be a little bit positive in the short term. I do agree that there is a feeling that the sort of AI boom is having some ripple effects in Europe as well. Not comparable to the ones we're seeing in the United States, but France, for example, is a leader in this among European countries because it benefits from relatively lower electricity prices. And this is going to help at the margin now, but also in the longer run.
I suppose in recent months, we have seen maybe those who've invested in Europe not getting the same sort of returns that they would have had if they'd invested in the US. And I just wonder whether there's a sense that Europe is kind of waiting in the wings for if people do want to diversify and rotate away from the US, if, for example, they start to feel a bit nervous about that space. Because one of our guests yesterday was pointing out that France gets very worried, or there's a lot made of its deficit and its debt pile, but it pales in comparison to the sorts of levels we see in America and what the bond markets are now charging the federal government in order to lend.
Yeah. I think this brings me back to the distinction we were making earlier, in the sense that there are some cyclical factors that are very hard to deal with effectively, because, of course, the European Union cannot control the level of oil prices. And this, of course, affects investor sentiment, and rightfully so. In the longer run, there are more levers to pull, which is basically why we saw a few months ago the release of the Draghi report and how to make Europe more competitive again. And I think we have seen a little bit of progress, tying to what you were saying about fiscal policy, towards using common European issuance a bit more frequently. This would be a game changer for Europe. We have seen progress since the pandemic with the Next Generation EU, the SURE program. So these programs where the European Union issues bonds in order to finance programs. We have seen a similar program with SAFE for defense spending. I would say that the limitation here, compared to the United States, is that the European Union doesn't just issue bonds every day. There's no certainty that it will continue to issue bonds. It's very much tied to different programs. And this creates uncertainty for investors because they don't know if they can invest in those bonds again in a few years when they expire.
Just to go back on that fiscal stimulus point, obviously Germany is investing very, very heavily in defence right now. To what extent do you see that feeding through and contributing to higher inflation?
I think it will contribute to inflation, which is why we think inflation will rise because of energy prices and will stay relatively elevated. So we have inflation remaining relatively high in 2027 as well. Below its peak, I would say next year we could see towards the end of the year 3% inflation, which is very small compared to what we saw in 22, but still a chunky number, I would say. And the problem here is that sometimes when you have fiscal stimulus in an economy which is hit by an energy shock, so a supply shock, 2 + 2 = 5, if you allow me that expression, because you're basically putting fiscal resources on a constrained economy, and this is going to generate price pressures. Listen, overall, the German investment plan is one of the things that is allowing us to forecast continued growth in Europe. So I think that is a positive development, but we also have to be mindful of the fact that it's going to generate some price pressures.
And what about companies passing on higher input costs to consumers? Do you see much evidence of that just now?
We are seeing some survey evidence of that, yes. And it's quite interesting because the reaction has been very quick compared to the past. For example, if you look at PMI output prices or selling price expectations of firms, some of these have reacted almost as if there's muscle memory in companies about the shock in 2022. Because they sort of know the playbook by now. Whereas in the past, let's say in the pre-COVID era, when supply shocks were not very frequent, I think there was more of a tendency to basically absorb these costs into your margins because you had the feeling that you could weather the storm. So yes, we are seeing some evidence of that. The ECB is aware of that, and they've pointed to these kind of surveys as one of the reasons why they should start hiking.
Luca, a really interesting conversation. Thank you very much for joining us this morning. Luca Penarola, Senior Economist at BNP Paribas Markets 360.
Thank you.
Stay with us. Still to come on the show, OpenAI tells CNBC it will comply with President Trump's AI executive order. We'll bring you more of Arjun's conversation with George Osborne. Plus, Hezbollah rejects the latest Israel-Lebanon ceasefire, complicating US-Iran peace talks. Dan will bring us the latest from Abu Dhabi. And with a countdown on until SpaceX goes public, we'll discuss whether the firm's valuation target is feasible with Morningstar's Michael Field. We'll be back right after this short break.
Executive Decisions is the new podcast from CNBC, where I ask powerful leaders about their decisions that changed everything. I'm Steve Sedgwick. Here's the CEO of the London Stock Exchange Group, Julia Hoggett.
There is no justification whatsoever for not doing the right thing, even if the right thing is hard to do. Which also means that if the context changes or the information changes, it is absolutely fine to also change your mind.
That's Executive Decisions with me, Steve Sedgwick. Get it wherever you're listening to this.
Welcome back. Head of OpenAI For Countries, George Osborne, told CNBC the company will comply with President Trump's executive order asking AI companies to provide models to the federal government to assess the capabilities ahead of a full release. Arjun sat down with the former UK Chancellor and asked what's on the agenda for OpenAI CEO Sam Altman at the upcoming G7 summit.
OpenAI has published proposals on how we think it's important that this technology is age appropriate. I mean, it's an enormously powerful technology to help children and young adults learn, but at the same time, there needs to be safeguards and guardrails, which is why, for example, OpenAI's approach, and we recommend this more widely, is that the version of ChatGPT you get is child safe and child friendly, unless you can prove with tough age verification software that you are an adult, and so it's kind of safety first.
Well, Arjun joins us with more now. Arjun, it's a really critical point, this, isn't it? Because everyone suddenly became alert to the potential vulnerabilities of existing software when that latest Mythos model came out. But this sounds like they're now really taking it seriously.
Yeah, look, the child safety and guardrails around AI is just a huge topic right now. When it comes to government and regulation, Trump's executive order is really looking at assessing the capabilities of these models. And you actually see that here in the UK as well, with government agencies wanting to have a look at the models before they're released. And so that's going to be a very big conversation this year for governments around the world. But I think more broadly, George Osborne and I, who now heads up OpenAI For Countries, which is effectively their program where they work with governments to roll out ChatGPT and infrastructure, etc. We were talking about some of the question marks that have popped up this week around AI spending and return on investment. And CEO of OpenAI, Sam Altman, actually was speaking this week talking about AI spending. And he was saying businesses are now saying it's a huge issue. they're realizing how expensive it is to use some of this AI. And that's an issue that's popped up from the beginning of the year. And this relates to a term that's been thrown around recently called token maxing, effectively where organizations are getting their users to use as much AI as possible, even if it's not necessarily productive in any way, but they want to be seen as using the technology. And then there was a second report related to this, and something the market's watching, from a company called Ramp, which looks at US business spending. And they said in June that actually spending on DeepSeek, remember this is the Chinese AI lab, with their model, spending on DeepSeek, it actually jumped in June. And what they're suggesting is there may be a world in which enterprises are now looking to get cheaper models beyond the frontier labs. All of this could play into some of the fears we've seen in the market around this AI trade as well. I spoke to George Osborne and asked him where we are at this cycle and if he's concerned that there is a bit of a bubble right now. Let's listen in.
From inside OpenAI is the future demand for compute is going up exponentially. These models are becoming more and more efficient, but also more and more demanding in the compute they use. It's unreported. I'm sure you report it, but the cost of compute has come down almost 100-fold over the last year. A dramatic improvement in efficiency, but at the same time, the models, because they're so much more capable, are using more and more of that compute. In other words, there's a lot of demand for compute. And, OpenAI has a very sensible forward program to build out its compute. I would say it leads all of the technology, all of the big companies in having anticipated that, having forward provided for it. We don't have capacity constraints. Only this week we broke ground on a new very large data center, gigawatt data center in Michigan, working with the local community so that they welcome it rather than oppose it. So, from where I see, there's a big increasing demand for compute, and I think countries and states in the US are going to want to be part of that.
Sam, just a few days ago, was talking about the cost of compute and saying cost is becoming a bigger consideration now for companies around this whole token maxing phenomenon. Are you seeing that?
Yeah, absolutely.
But does that mean that demand could get hit, where companies were now going all in, wanting to try the technology, but now realizing actually this is costing us quite a bit?
Well, I think any company has to pose the other question, which is what's the cost of not adopting this technology? I mean, when you get big transformative technologies in history, the companies that don't move with it are the companies that don't ultimately succeed. And I think there's a bit of a similar question for nations. I mean, big transformations like an industrial revolution do quite dramatically alter the relative position and power of nations. I think countries, to be fair, like my own here in the UK, which say we want to adopt AI, are the ones that are going to be well placed to benefit from that future.
Now, we hear similar messaging from all the frontier labs that compute requirements are going to be up because the demand is going to be up. But right now, we've sort of gone through this phase where there's been a lot of hype around AI usage. And so a lot of companies are trying it, a lot of enterprises are trying it out. They're seeing what effectively it means and if there is any actual return on investment right now. And I think that's where we're at, where the market's asking these companies. And it's going to be very interesting when Anthropic and IPO and OpenAI come to market as well. Those are the big questions. Are their models going into enterprise? Are the enterprise seeing return on investment? And actually, how much ultimately are they going to end up spending on this AI when it is quite expensive at this moment to run?
Serious question, Arjun. What value does George Osborne actually bring to OpenAI? I mean, since being Chancellor, he's had a myriad of jobs. He's editor of the London Evening Standard newspaper for a while. He's done various academic things. He's had a stack of jobs. What does he actually bring to the party? He's not a traditional tech bro or anything like that.
Relationships, I would say, is probably one of the biggest assets that he has with other government leaders around the world.
But he hasn't been a frontline politician for decades.
Yeah, that is true. But I think he still has some of those relationships in place, but also know-how of how government works, I guess. And that's something that maybe tech companies don't necessarily have. The tech companies, you see them, they move at an incredibly fast pace when it comes to development of technology. They want things done. They're developing new models. You see every few weeks a new model from OpenAI, Anthropic, or one of these frontier labs. That's the pace at which they're working. That's not the pace necessarily that government works at, and some of these public institutions. So I think there is that know-how of how to get some of this technology into government, how to sign deals with government around things like infrastructure, what that might actually entail, what provisions need to be in place, and what concessions may even need to be in place for government to accept. So I think that's probably the role George Osborne's playing here, is working and helping OpenAI to work with these governments around the world and get ChatGPT and some of these infrastructure out there in the world.
All right, Arch, good to see you. Thank you. More from Archon later on in the programme. In the meantime, the US National Security Agency is reportedly using Anthropic's Mythos model for cyber attacks. That's according to the Financial Times, which says around 6 Anthropic staff members have been embedded within the NSA to assist in the use of the model for offensive cyber operations. It comes in spite of a legal standoff between the Pentagon and Anthropic over how the company's technology is used in warfare. Well, Anthropic has called for AI labs to slow the pace of development, suggesting systems are advancing so rapidly they may soon be able to improve themselves without human intervention. The company warned that while the self-improvement hasn't happened yet, it could come sooner than most institutions are prepared for. Anthropic, which has long emphasised AI safety, has faced criticism over its policy work, which some perceive to be designed to slow the advance of its competitors.
Senior US officials have reportedly held discussions with major AI companies about the possibility of the government buying stakes in the firms. This is according to digital news outlet Notice, which cited sources familiar with the matter. Discussions have reportedly centred on having firms voluntarily cede the shares to the government, with returns on investment potentially directed to public purposes.